Yeah, now we are live, Robin. People need to understand, need to discover the difference between single B and double B. Yeah, because you know it before. Yeah, it's very important because this one for us it's the first webinar in English, and you are the first international guest for us, and yeah, it's a very pleasure to host you here. And sorry everyone for my Italian English, you know it, and but people, we are here to learn, to try, to fault, and to get better. And now, double B, it's your time to introduce yourself, say something, and greet everyone, because first minutes are very good to wait others to come there and say hello, everything, and okay, it's yours.
Thank you very much. I'm honored to be the first international guest, to be honest. It's really a pleasure to also talk to other European countries and people who are enthusiastic about the whole development of crowdfunding. So let me tap into the single B, double B thing so people know where that joke came from. So my name is Robin with double B, and I'm currently involved into the scene of crowdfunding for over 10 years. And I was a part of a company which was started in Rotterdam in the Netherlands back in 2011. And the name was Simbit. And it was one of the first crowdfunding platforms worldwide and one of the first funds in the Netherlands. And actually one of the co-founders of Simbit is called Robin as well. But that's single B. So he actually started the endeavors of opening up the whole world of crowdfunding. Back then, actually, without the goal to set up a crowdfunding platform, but more with the, let's say, vision and mission to create a stock exchange for startups and SMEs, so they could easily raise capital from a larger group of people and combine that with, let's say, democratizing venture capital. So that was the main goal where Simbit was founded on. I joined a little after inception, so I would say 2013 when I joined. And over the time, we grew in the Netherlands to be one of the most significant equity crowdfunding platforms. And in the end, last year, we sold our company Simbit towards European crowdfunding platform Seedblink, or better told, European co-investing platform Seedblink, where we are going to tap in a little bit today on what that means. My background is actually Erasmus University. So I studied, back then the study was called Entrepreneurship and New Business Venturing. That's also where I met my, let's say, fellow entrepreneurs. So during the studies, we already started to build the framework for Simbit. And after that, I stuck around with the company with all the endeavors we had in between, and eventually became a commercial lead, or let's say commercial director of the company, which I'm now also for the region Benelux within Seedblink.
And people need to understand how we create our connection, because sometimes we say try to get your clients outside of Italy and try to get your partners outside of it and go outside, try to do it. And just to be honest, I was in Netherlands last year in October. You can find some my webinar when I was in Amsterdam, and with Giorgio Pastarini, I remember it. And I was a venture capital employee, and Robin, single B, when Robin was talking about him, was asking me, "Are you coming here just to having an appointment with me?" I say, no way. I'm here for ADA, Amsterdam Dance Event, and just to be honest, it's a very good way to find a new connection, and now we are here. And so, see, just in Italian only this phrase, because se avete domande e quant'altro, fatele pure in italiano senza problemi, direttamente nei commenti e quant'altro, perché interrompo, io prendo la palla al balzo, traduco e passo la palla a Robin. I was saying about if someone has some question in Italian, don't be afraid about writing it directly in the comments, and I will translate directly, and I will stop you right now every time someone is asking something. No way.
No problem.
My goal is keeping the flow, so we will find how to interrupt in the correct way your discussion. So we need to start. We need to talk about our points, and it will be very, very funny, because I already did it, but finding new approach to crowdfunding, to raising capital, to do companies, business, and so on. It's not typical in Italian, and we have to understand your idea about it. So, starting from the beginning, the first one is I have a company in Italy, and I want to take the more advantage as I can to raising capital here. So with the European regulation, I can do right now, starting from November, from the Italian side, we can do it. So I really like Seedblink, and then we will understand what Seedblink is, because it's not a crowdfunding platform, is something more, but we will discuss it later. And how can I present myself in the best ways I can, and what are you looking for, and what is your idea to select new potential partners, new potential clients to get listed on your company and on your platform and get new potential investors. So let me able please to understand how to do it in the best way, and starting to get my international investors as soon as I can.
Thank you. Good question. And I would say that it depends, of course, on the kind of startup you are, the process you already had, so the traction you had, and maybe also the investors who joined the round. So let me state from the beginning, because we already quickly or swiftly touched it, is that we are not necessarily calling ourselves a crowdfunding platform, but in theory, we are acting amongst crowdfunding regulation. So this means that we do allow small, what was called retail investors, to join a company, and we will facilitate the whole process of reaching out to the investors, onboarding them, and making it into one single, what is called SPV, special purpose vehicle. So if you want to present your company, at first, of course, it's really important to have significant materials. So materials, with that, I mean usually one either two-pager, which is quickly or swiftly explaining in which market you are, what's the team behind the startup, what's the business model, really important, because people need to understand how you are actually going to earn money, and where are you at? So what's the stage of your company? As you might have heard before, there are different ways of, let's say, calling a fundraise a certain stage. So you have pre-seed, seed, series A, all kinds of terminology in raising capital. And I think that it's not unanimous into using these terminologies, because sometimes somebody is referring to a 5 million, let's say, round as a seed round. And in another startup, it might be a series B or a series A round. So it's not that important to actually get the right terminology in terms of funding round, but it's more that you need the best materials in order to explain where you are at, so another company or investor can understand which stage you performed. So next to the two-pager, you usually have a pitch deck. A deck should be quite self-explaining. There's a lot of online info on how to create a killer pitch deck. And I like to work with a model which was developed by Guy Kawasaki, who is like using 11 to 12 slides in order to, let's say, get the main message across. And then behind your deck, you usually have what we would call an IM, so an investor memorandum. These materials should be slick. They should be fully developed, and they should really highlight the most important points of the company.
I have, another big question for you. Do you offer your service only to Dutch or some countries, specific companies, or think about I have an Italian company. Can I do it with my company, or do I have to create another one? And then we will talk about the SPV, because in Italy we call it the vehicle company, but it's second step because it's not usual for us, as I said. But starting from here, like Y Combinator, they ask you about creating a new company with very good regulation, because they know the country laws, and you can do it without no problems. And what about foreign company? How do you connect with them? Like asking for funding a new one, or what is the approach in this way?
No problem to keep your current entity. So usually we are able to work with every European headquartered company. So this means that if you are in the European Union or even in the UK, which is still somehow European Union, we would be able to work with the company. So we can work with every vehicle out there. I think most important is that if you are starting up, usually I advise to first start with a local, let's say, entity in order to start up, because usually you need to onboard the local community of investors first, and they are used to your, let's say, local entity. So if you're starting to raise with a private limited company from the Netherlands, which is called a BV, that's maybe a really known entity in order to raise funds on a European level, but not for more local oriented investors. But in the end, the entity for us doesn't really matter. We can fix, let's say, all European entities. But it is important, of course, to think about an entity which allows you to also issue shares. So you should have an entity which can onboard new shareholders. Then if we take let's say a small step back to the materials, one of the most important things which I miss in a lot of decks is actually a concrete call to action. So what is it what you need? And that does not only entail, hey, I need 500K, but it does also entail, hey, I need 500K to do X, Y, Z, and I will offer you X, Y, Z if you become an investor. So there needs to be an offer. And the offer can be a little bit vague at the beginning, because there's always room for negotiation, but at least you should have thought of a basic offer there. If you look to our platform, we offer, let's say, two ways of raising funding. So we have what we would call syndication services, which means that you are onboarding a couple of your own investors and we leverage it through our community. If you do that, then you should be the director of the deal terms. So you should come up with either a convertible or an equity deal, however you like, which you maybe pre-negotiated with some of the contacts. The other product we do is what we would call a venture capital backed deal. And with a venture capital backed deal, the deal terms are actually negotiated between you as a company owner and the VC. So you go into a negotiation, this will deliver as an output a term sheet, and this term sheet will be leveraged by us. So that's the base set. You need the materials, you need the deal structure, and you need, let's say, more than only the ID. Because only funding a business plan or a good ID is usually difficult. So you need to have some sort of proof that what you're tackling, the problem you're solving, has some validation, which can be in beta, it can be with paying, let's say, testing customers, it can be with MOUs, LOIs, all kinds of, let's say, materials which can back up your validation. So we, as a potential investor, know that you're not only talking about this big, let's say, pink cloud and a potential problem you want to solve, but you actually identified that there are people out there in the market who are willing to pay for the solution you offer. So that's, let's say, basic things you need in order to get for funding at Seedling.
You're talking about something we call it like rewards, because you know it's not about term sheets are not like rewards, but when we are talking about crowdfunding campaigns, we really like to think about a good way to reduce the level risk from the investors is let them be able to collect some rewards and think about a service or product reward or a financial rewards or an experience rewards, as we said. It's a good way to do it. Do you suggest, beside your approach like term sheets, what we need to do it like business development or something like that, because we need to go straight with our company and growing with that. Do you suggest an approach with investors, international investors, with these type of rewards? Like, hey, maybe you're not the typical VC, the typical angel investor profile, but maybe you can be interested in this way, and I will interact with you, offering you the reward of my product discounted by 50%, 70% if you put this money on my crowdfunding campaign. And what do you think about this type of approach? As I said, because the goal is reducing the risk level, because startups are famous for fail. So we have to be honest and to reduce the level of the risk. What do you think about this approach for international investors? Do you find as a regular pattern, or do you think it's a very strange way to have them?
Now, it can be really interesting, but you need to focus upon the people who you are offering it to. So if you are doing a B2C, let's say case, a B2C company, then you're directly selling to consumers, right? So then potentially by opening up a crowdfunding campaign, you can not only involve, let's say, investors or typical angels or VCs, but you might also be able to onboard your stakeholders, like your clients, your suppliers, your partners, everything around it. And they might be interested to not only get, let's say, the deal, so the equity and the potential return on investment, but also a discount on your product. So it might be really effective. But if you're a full B2B company, a little bit more tricky, but still you can do it. So we advised it before to do it, but then we do it for a specific subset of the people you invite into your campaign. So let's say you're a SaaS company, software as a service, and you're marketing towards a specific crowd of companies, SME companies, which should be your client. Then you can offer these companies the ability to become an investor into your, let's say, campaign. And next to the fact that they are an investor, you can offer them, perks, something extra, which can be in a discount. It can be in VIP support. It can be in co-development. So if they need something more special, they can get to you because they are a shareholder of the company. So this way, you not only create, let's say, a customer-buyer relation, or seller relation, sorry, but you create a more durable relation with some, let's say, ground rules in the equity. So if the company, so your company is profiting, your customer or supplier or whoever took the equity is profiting as well because they have a higher value of the investment. So it can be really useful.
Okay, and then I have to ask you about two different things, and we have to go some steps before. The first one is about SPV. SPV, as we know, is the creation of the new company to invest into another one. In Europe, in Italy, as we were discussing it about in a private conversation, and I was saying about it's not typical in Italy because it's very expensive, like 8 to 10K per year to manage it without do nothing there, and it's not about your approach. Every time you're starting from the SPV and then you create the pitch deck, then you start with the funding stuff. And do you have some cases, and it's a problem, we have to say it vice versa, and do you have some cases of companies that raise capital without SPVs, and they cannot raise capital more because they don't structure it in the best way when they started, and there was a problem for them. They were stuck with their funding method and funding way?
Yeah, we definitely saw this happening because what the good thing of an SPV, it's called an SPV because it's called a special purpose vehicle. So the only thing which the new company has as a goal is to, let's say, hold equity into the investing company, so the one who's selling the equity. And it's actually created to, let's say, keep a clean cap table. So to keep your equity or shareholders management clean. If you don't do this and you allow people to enter directly on the cap table, you get a scattered cap table, which means that there are quite a lot of individuals in there with a specific share into the company, which makes it harder to raise future rounds. Because if you, for instance, are onboarding a VC is usually willing to make the larger decisions into a company together with the founding team. But if the shareholder register is already really scattered and there's a large pool of people who can potentially say or join, let's say, the conversation and has a voting on, let's say, the main decision, then the VC might block. They might tell you that either you need to restructure the company, which takes up a lot of time, it can involve a lot of money, and it's a difficult process. Or they might say, I'm just not interested because the company is not steerable anymore. So from that perspective, we always advise to be critical on who is entering your cap table and what do they offer in terms of value. Because only investment is usually not the main value, because you also need network, you need knowledge, you need intros, etc. So we highly recommend to do this via a separate entity if these are smaller investors. If you're talking to an investor who's investing 100, 200, 300K on an individual level and you're pre-seed or seed, then it's another story, because usually these investors want to join the company not only in order to invest their money, but they also want to bring their expertise, their knowledge, and they want to work together with you. Then it would be an opportunity to add them to the cap table, so directly without the SPV. But with crowdfunding, or can you imagine allowing, I don't know, 100 investors directly in the cap table and then organizing a shareholders meeting? Well, I know you're a fan in Italy of dining with a large group of people, but I think that this should not be a regular shareholder meeting.
Your nightmare will be one of our customer, because he had 1,000 investors. So think about this in 26 or 27 different companies connected with an holding, but every company was a single one, not a SPV. So think about managing them was a nightmare.
Yeah, it becomes really difficult, and not only for investors to join, but let's say you want to make a big investment. Of course, you have a shareholders agreement, and in the agreement, you are talking around the things you stipulate as what you can do as a director and what abilities you have to make decisions. But sometimes you just have to go back to your shareholders meeting. Well, I can only imagine these kinds of meetings. This would involve, let's say, probably a lot of wine, getting the people drunk, and then just do the voting, because then they don't know what they vote anyways. But in order to keep it, let's say, controllable, usually we advise to structure it like that, indeed, with an SPV.
Yeah, we found a turnaround or a trick to avoid it, because in the term sheets you can insert a law or something like that, providing you to bring all the little investors when you're raising some capitals, like when I raise 1 million, or connected with the pre-money valuation, when we will be 5 million pre-money valuation, okay? All the investors below, for example, 1%, will go into another SPV that I didn't create in the beginning, so I can create it later, and I can bring all the investors into this company. So in this way, you can avoid to spend a lot of money to manage all these investors. And because it's not our problem. It's our problem, but it's not our fault that in Italy it's very expensive to manage SPV.
And then you can for
so
instance
you can
talk
decide
to
it
the
later.
investor. And the investor, maybe let's say it's a Dutch VC, I don't know. We have quite a good setup for this, so we can registrate the SPV in the Netherlands, and that can be a shareholder of the Italian company, which is usually no problem. So then it's an easier setup, it's cheaper, faster, and as long as people agreed upon joining such a setup, it goes without, let's say, without a saying. But if they didn't agree, I want to wish you all the best.
I was aiming for this because with Italian regulation, you have to think about it. So you are raising capital for your Italian company, but hey, what about creating a new company in Netherlands, a BV? As you said it, it's cheaper than creating a new one in Italy. So you have to go to Seedblink, because Seedblink it's from Romania, so it's not directly from Netherlands. So you can go there and have a new partner and create a new company, a new entity in Netherlands, and getting new investors from them. And you have to think about acting like a European citizen, not about I'm from Italy and I have to keep it Italian with pizza and mandolino, you know it, and you have to change your pattern, your ideas about it. Because what do you think about it? I was aiming, as I said, from of this, and your idea about that, it's in the same way. We have to take the best as we can from the Italian the European regulation.
Yeah, definitely. I would say that, of course, what usually happens, and that's where let's say the basics come from, is that the country is trying to protect that the money who's into the country stays into the country, so it's not flowing out of the country. That's the main reason why they are putting all kinds of regulations in there. Of course, we know it's all political, and political means these are non-entrepreneurs, so they really don't know how to structure things. So usually they only block things. But now with European regulation kicking in, it becomes more of a uniform thing. And at this point in time, we even also changed, because what we did before is that for every successful fundraise, we created a separate SPV. Most of the SPVs were actually located in Romania because it's cheaper and it's an easier setup. So we created Romanian SPVs and they become a shareholder in the company. Now we actually transition. Now we are becoming more of a European focus towards a one vehicle, which is located in Vienna, Austria. It's a trust, and this trust is actually becoming the shareholder into the company. So we have one vehicle, which is actually combining all of the investors into what we would call verticals. And we proactively manage this vehicle, and the vehicle becomes a shareholder on the cap table as one single line. And then the investors join that specific vehicle. And this is all regulated within European regulations, so it makes it even faster, cheaper, and easier to do this.
And it's this is the international approach. It's not the Italian with a lot of people at the table for having dinner or lunch. Yeah, we are our habits are this. Okay, and now the biggest question here. So it's about what about Seedblink? It's not about your marketing stuff, your salesman. Yeah, I have to sell about Seedblink. Yeah, no, we have to talk about your experience, because we are in a moment, in a very particular moment, because we discovered about the crowdfunding some years ago, equity crowdfunding, starting from the reward from Kickstarter and so on, 10 years ago, something like that, and then equity crowdfunding. A lot of people want to put it their money, and then now we are in the third era, as I said, with others, because with these new regulations, so we have to act like European citizens. And so Seedblink, it's not a crowdfunding platform, because I need to get new investors. I need to understand how to manage my business to keep it growing and so on. And you are talking about a co-investment platform, and we don't have anything like this in Italy, and we don't know nothing like this. And so it's your turn. What about this? Matching capital is something like matching capital in some ways. I don't know it, and how it's useful for my company. How can I use it for my business and so on? And I need to understand it.
No, I can imagine. So let me quickly explain, because at the beginning I already said indeed that we don't really identify as a crowdfunder, but still we act on crowdfunding regulation. But the difference we usually imply into every process is that what we do is that we are not necessarily into every round we facilitate the only investor. So what you see in a, let's say, a pure equity crowdfunding platform, usually they set up a campaign, they do a lot of marketing. It's mostly for companies who are, let's say, B2C focused, or who have an easy to sell message. So it's easier to bring across to a community. And you just combine a lot of people into these funding rounds. That's, let's say, a way of doing so. But in our opinion, it's lacking some professional expertise. Because if you would integrate a more professional investor in there, which can be either a venture capitalist, it can be a corporate venture capitalist, it can be an experienced business angel, they usually know a little bit more around, let's say, 2 or 3 things. One is setting up a company at the first place, because they did probably do this already as a serial entrepreneur. 2 is how to negotiate and how to evaluate a business, a startup, from scratch. So they have more experience into the negotiation stage of, let's say, forming a valuation or a fair set of deal terms for convertible. And third, and maybe most important, would be that after an investment has happened, they also know how to act, or at least you would expect that they would know how to act. And these 3 things are usually why professional investors are interested to join to join your company, and for you interesting to invite them. So what we do with our co-investment platform is that we highly encourage a startup to get one of these kinds of investors in, to negotiate with this investor specific deal terms, to do a due diligence on the startup, so they really check the technology, the markets, and everything you promise as a startup. And then by giving their validation by investing into your company, this forms a leverage through the crowd. So we still reach out to the crowd, but we actually get a professional investor to join first, which is then making the deal terms more validated, so it becomes easier for a smaller retail investor to actually get what's happening and to trust that there's somebody on the table who actually knows where he or she is talking about. And that's what we try to facilitate into most of our rounds. So we are usually not the first investor, but we are tapping along with some initial investors who did all of the screenings, and then we do our own screening as well, of course, but we also do the screening of the investor. So is the investor legit? And do they have the experience they state? And from that, we market the opportunity. And that's the co-investment part where we highly try to focus upon in a lot of our activities.
Some particulars that we have to focus on it because we already discussed about it, but everyone needs to understand it. Professional investors that Double B is talking about, it's not the investitore professionale, very similar in Italian. We already know, because in Italy you have to within November, with the old regulation, you must find a professional investor to validate your equity crowdfunding campaign. So he has to put the minimum of 5% of your raising capital, the total amount of your raising capital, to validate your business. And in Italy, we don't have any idea. We don't have a lot of track record about VCs, angel investors, and so on. We don't have them. We don't have, and they are very few. And we don't. Companies in Italy are not skilled about it. So we need to understand you're talking about another level, another pattern. It's not about the Italian. And
no, it's not what you indeed are explaining now. So I think best would be to explain, maybe for some of you who are listening, they know the company. So we're currently also raising funds for an Italian company. The company is called Doorway, which, funnily enough, is an equity crowdfunding platform from Italy. And at this point in time, they are raising a total round of, let me quickly check, of 2 million. So they want to raise 2 million. And there's what we would call pre-commitment of 1.7 million. And the pre-commitment actually comes from these kinds of, let's say, professional investors. And in this case, this would be CDP Venture Capital SGR. So it's an Italian VC owned 70% by CDP Equity and 30% by Invitalia. And they together are investing into this company. So they take the lead, they determine the deal terms, and then we leverage that term sheet towards the community, which are all European citizens which are willing to join via the platform.
CDP is probably the most famous venture capital in Italy because it's a very Italian approach because it's a public company. So they are investing. Invitalia is a sort of public company, so they are trying to pushing out the Italian companies to raise more capitals and so on, because it's very important to stimulate to do something to put money on the companies and let they able to do some mistakes, because this is the to be honest, the real one. And some step before, you were talking about the different stages, like a pre-seed, the seed stage, Series A, and yeah, you know better than me. But we need to understand the two parts, because think about we say in Italy we are made of micro companies, because the typical company in Italy is made by a family that is building his own business. So as a startup dictionary, maybe we are talking about only bootstrapping companies, but they are not bootstrapped. They need to be self-sustainable, and they need to find a way to monetize as soon as they can. So what about what do you think about not very SaaS companies, not very tech companies, but like standard companies? Are they able to raise capital even on Seedblink or even outside of the country? Are they interesting because they are earning money? They don't be an unicorn, never. They neither become an unicorn, but maybe they can be attractive or not. And what about the sizing? of your idea of pre-seed and seed, because we have to align ourselves to your idea and our idea, because we need to understand what you're thinking about this sizing of investments. So starting from the sustainable companies, I said, but yeah, it's your turn.
Yeah. So maybe first question, are companies who are not typical SaaS or tech companies, are they fundable? Yes, they are definitely fundable. Are they fundable via SeedBlink? Well, that becomes a problem because we focus 100% on tech companies. So they are always with a strong tech component, which could be a platform, it can be hardware, it can be software, it can be anything, but it needs to be tech related. Does that mean that non-tech companies are not investable? No. On the contrary, only the community or the crowd which you are approaching should be different. So with Symbit before, the company I was at before, we had no tech focus. So we also funded beer breweries, or we funded non-tech companies by heart. So maybe some Horeca even. And this can be really interesting, but that's a tip I might want to give to everybody who's listening with a company. If you are raising funding from a specific, let's say, industry or company or anything you are doing, before you approach investors, make sure that you did your own homework, so that you scan the investor, scan their portfolio. Usually, mainly venture capitalists, they have a list on their platform on what their thesis is. So what can they do as an investor? Make sure to read this, because investors get shitloads of pitch decks and intros and whatever. And the people who are not taking, let's say, the time to screen the investment thesis and to really focus upon the narrow of the fund, they won't get any response. And it takes a lot of time of all of the investors to screen through the decks. And if they then are finding out that it's not their focus, then it's wasted time. Not only from you, from him, but also from you, because you try to approach them in the first place. So really do your homework there. That being said, if you're a non-tech related company, we might not be the one who can help you, but again, try to, let's say, see who might be companies, investment funds, or investors who are in the end joining these kinds of companies, and approach them, because then you know that you're included in their thesis, and the chances of getting a conversation with them and talking around deal terms is just getting higher.
Okay, and my goal is bringing people to open some restaurants, for example, some pizzerias, using a crowdfunding approach, because thinking about it's maybe the best one, because you can find a lot of people joining you and visit your local and decided to get a pizza there or have dinner. And it's not only about raising capital, it's not only about deep tech, it's not only about software as a service and or right now AI, because we have to do it to raise capital. It's not this approach. Think about the Brewdog. Everyone knows about Brewdog when we are working on crowdfunding market, and this is the correct approach, a normal brewery. And think about even in you don't know it, but in Italy, if you're investing in innovative companies, and it's very simple to get the innovative stamp, you can get tax exemptions, tax advantages for as an investor, like starting from the 30% to the 50% of your amount invested into the company. In Netherlands, it's zero. In Netherlands, and you're raising more.
It's zero, yeah.
Zero. And you can invest. You can raise more capital than us, and it's incredible how we cannot do it with good companies, and because we are thinking about it's very difficult. It's only about get a new idea, get a new pattern, and yeah, this is what I am aiming for, understanding it. And the second question is about just for having an idea. I have a new business starting from scratch. And what about your idea of the sizing of a pre-seed round, of a seed round, and so on? Because people need to understand differences between Italy and out of Italy, how much they can ask for their own business and to raise their own capital to keep growing and so on.
Yeah, I would say that in general, the difference between pre-seed and seed would be that pre-seed is usually, let's say, somewhat of a pre-validated, pre-revenue company. So there's maybe a beta. There's, if you're talking about TRL, technology readiness level, it's usually below 5. So it's a scale from 1 to 10. And there's not a lot of commercialization yet. So you're really building, let's say, the basis. That's usually pre-seed. That's a popular domain nowadays in Europe because that's where the battle will be fought in the coming, let's say, 1 to 2 years. A lot of VCs are battling around pre-seed companies because they are easier to evaluate, or maybe a little bit of the negative part for the startup, it's easier to negotiate because there's not a lot to evaluate yet. So the negotiation becomes more of a, let's say, important thing. If you go into seed stage, this usually means that you have validation. So you have paying customers, you have an MVP, you have traction, partnerships, anything which proves that you're on to really tackling, let's say, problem market solution fit. So that's the main, let's say, seed and pre-seed distinction. There are exceptions, and that's mainly opposed to, for instance, the industry you're in. So if you're a SaaS startup and you're pre-seed, then you don't have any customers. If you're a SaaS startup and you're seed, then you get some first recurring revenue. If you're a deep tech startup and you're pre-seed, then you don't have revenue, you don't have partners, you don't have anything. You only have a really cool idea, a basic technology, and you have a really, really large market. A seed round then can still be without any commercial revenue, but you found some partners, you have some technology partners, and you are a little bit further down the line. Even a Series A funding with a deep tech startup can still be funding without any commercial traction. But then there needs to be other validation. It needs to be scientifically proved. It needs to be, let's say, you need to have a stamp of approval, or you have some, let's say, external entities validating what you are doing internally. And that's would be the main difference between industries, at least between the two I just sketched.
So we have the starting point, ending point of a co-investment approach. What we are looking for get new company, because your business is not only about get new investors or let them able to invest, but also to find good companies to come with to come at your door and asking for about I need to raise some capital and please help me because it's your business. As a platform, you have to serve both sides. So sometimes we are missing or forgetting it, but it's very important. So we are going to the end of this webinar, and Double B, thank you very much for your time, for your efforts, for your attention. And as I said, it will be not the only marketing stuff we created together. But what about having a marketing stuff without a call to action? So now it's your turn. So let us where can we find you, or where can you find SeedBlink? How can we interact with them? How can I send my project to SeedBlink? And the CTA is the most important part, as you know.
Yeah, of course. I'm not only here to talk around the CTA, but really to help you guys to understand what's out there. But if you would talk around how to fund with SeedBlink, there are a couple of options. I would say at first, if you're interested to learn more and you want to talk around it, connect me on LinkedIn. So there's always this possibility. So we can have a chat together and we can see if there's a possibility. If you already want to know more, of course, you can go to our website, which is seedblink.com. And in the website, you can already validate what kind of deals we funded before. And there's an opportunity to go to the founders part of the website where you can read a little bit through our, let's say, possibilities and the products we offer. You can fill in a form there, and within that form, we will ask you a couple of things. So we get to know you a little bit, or at least we know some basic points around your company, the fundraising, Do you have any investors who are joining? These kinds of things. And then from that point, there will be a country manager, so somebody who's contacting you in order to talk around the possibilities, to tell you more about how we structure things. And then we really dive into, let's say, in-depth conversations. So I highly encourage you guys to go to the website if you want any info. Connect me on LinkedIn. And within the website, you can also go to our blog, where you can read some, let's say, more of European trends or general info on how to raise funding throughout, let's say, a platform, or how to work with investors, so more general tips and tricks.
So thank you very much again, and now it's my turn to say to have a little Italian part, just to announce the next webinar. And so dopo un webinar intero in inglese, adesso c'è uno spazio un po' italiano per recuperare, fare una traduzione veloce, e noi ci vediamo, adesso che stiamo chiudendo, il 28 giugno con Giancarlo Vergine per vedere l'approccio data driven, l'approccio inglese comunque c'è sempre, per la tua campagna crowdfunding, perché non è solo una questione alchemica, oh mio Dio chissà come va, c'è anche un approccio più scientifico, e insieme vedremo con Giancarlo appunto come si porta al successo una campagna partendo dai numeri, non dallo stomaco, non da a sensazione, ma lo vedremo assieme. So Robin, maybe my future will be in radio or in television, something else, because I really like it. It's my favorite part during the work. And so I have to thank you again for your time, and can't wait to come again in October in Amsterdam, as I said. So it's time for ADA or some pre-parties before it, to avoid a lot of people, a lot of crowd there. And crowd only for events, not the equity crowdfunding. So just to be clear, okay? And so it's your turn to say goodbye, and people here are saying you thank you again, and everything, and then we are done.
Yeah, thank you very much, everybody, for listening. And I hope you had a little bit of an understanding or a view or some extra inspiration. Yeah, and again, thanks for inviting me, Claudio. It was really interesting. Well, like you are visiting Amsterdam, I'll definitely come to Italy again. It's one of my favorite countries. So I've been to a lot of places already, and it's definitely not the last time I visited. The only thing I need to do is practice a little bit of the language, because I really like to listen, but I can't speak.
Yeah, but it's very difficult. It's very difficult. And so we have to talk about it in front of dinner or lunch, because in Italy, during a dinner or lunch, during the lunch, we are talking about the next dinner. And during the dinner, we are talking about the lunch.
That's what I like about you guys. Yeah, that's we can learn something from that. Here, lunch culture is awful, and dinner, let's not start about it.
So we have to develop about it. So we will launch a platform, a co-investment platform for lunch and dinners. And
that sounds like a great opportunity. Let's discuss business and deal flow around dinner.
Ok, thank you very much, Robin, and so grazie a tutti quanti, and see you next time, and thank you again for your time.
Grazie mille.
Bye bye.
Ciao, bye.